traders, Richard Jacobs here, and welcome to this week's edition of the Underdog Weekly Perspectives Report, where we reflect on the trading week that was in the local market and also form some perspectives on where we think the market's going to be going or doing over the next few days and weeks. I should start off in saying that I should be saying good evening because it's Friday night at the time of this recording. I'm going to be out of town for a few days, so I thought I'd do the video a bit earlier and send it out to you guys. We are taking a bit of a chance here because, as you all know, we've got the French elections happening over the weekend, and come Sunday, we could have a very different position in terms of what markets will do at the start of the next week. But given where we are at the moment, the structures we're seeing, the patterns we're seeing in the market, let's kick off and form some views on what could happen in the week ahead. Let's start off, as we always do, with the daily chart of the top 40, which you have up on your screen at the moment. And as you can see, in our last weekly report, we spoke about the market hitting this overbought condition as indicated by the stochastic oscillator over here, and pushing into this previous swing high level over here. And what we felt was that there would be a degree of consolidation playing out, the extent of which was yet to be determined. It could be a sideways consolidation, it could be a deeper retracement. And as you can see, what happened over the past week is the market moved sideways initially and then did pretty much quite a shallow retracement here. If one were to put some Fibonacci's to it and look at the retracement level, we actually tapped in on that 38.2 retracement right there, coming in at about 46,600, 46,650s on the market. And it was a question of, do we see the market finding support here at this previous price structure, or do we see a deeper retracement playing out perhaps into that 61.8 level right there, where there's a bit of minor price structures potential support coming in. Now today, today the market actually pushed up quite strongly into the close. It's perhaps not fully reflected in the way the candle, in the daily candle here, but we had quite a strong finish to the week as the market pushed back up. And with the stochastic still rolling over from overbought conditions, it now becomes a question of, do we see the deeper retracement playing out, or do we see the market pushing up towards that 127 projection level that we've been flagging around about 48,000 as a potential target area for the current leg of the move. Going into the weekend, it does appear that there seems to be a bit of bullish bias from a structural perspective, and we're going to start to see that push playing out. But let's just zoom out quickly and look at a couple of other things on this market. First up, very interesting to see that as we go into the French elections, we're now also starting to hit those levels last seen around about the 24th, 23rd of June. And anybody who's been in the market for the past year will remember that the 24th of June was the announcement of the Brexit results, when we had that sharp sell-off in the local market. So it looks like we're pushing towards those those pre-Brexit levels in the market at the moment, which is quite interesting. And you'll see that 48,000 level that we've been flagging also lines up with this previous price structure support, these highs in May of last year. So again, some good confluence in terms of that move towards the 48,000 level, and we remain with a bullish bias that we're going to see the market leg up into that 48,000 level over the coming days. As I said, the outcome of the French elections could shake things up a bit, but we'll see what happens and play that as it goes. At this stage, things look pretty positive for that continued move up. And you also recall that we are well positioned because we do have a setup that we highlighted in our weekly report and also to our daily subscribers where we got long of this market around about the 46,100 level. We actually got long of this market. It's now sitting or closed around about the 47,000 level. So we're still looking for that push up towards the 48,000 target level. So things looking good on that front. Having said that, we spoke about some of the range returning to the market, and it's interesting to see that we're continuing to see a drop off in the volatility in the average true range, or as indicated by this normalized average true range indicator that we have up on the screen. And it's the lows that we're hitting here. Just to give you an illustration of how compressed ranges are. I mean, these lows that we're hitting here, we last saw, let's go back, right there. That is May of 2015 was the last time we saw a lower level of volatility in the market. So that just gives you an illustration of how tight market conditions are. And to a certain extent, especially if you're a trend continuation follower or a breakout trader, that's the level of difficulty. Or tight markets add a level of difficulty to your trading, and that's what's made it difficult for a lot of traders over the past let's call it year, to be honest, with the very low levels of volatility in the market. But having said that, as I said, we remain of a bullish bias, and we were looking for that follow through. Other thing I wanted to highlight, quite an interesting, markets tend to move in patterns, and things repeat themselves. And what caught my eye was interesting here is where we have this overbought stochastic right here, and we have this consolidation. This little bit of a sideways, slight pullback consolidation over here. It's actually very similar to a condition that we saw towards the end of last year, right here. Notice how we had that overbought stochastic, rolling over, and that lines up with price pushing up, testing previous price structure as it's doing at the moment, testing previous price structure, doing a bit of a shallow retracement as well, and then pushing to the upside. So really what we're doing is we're also looking for a repeat of that particular pattern in the current setup, and then push to the upside. So again, none of these things are conclusive on their own, but when you're trading the markets, when you're forming a view on what could happen, you add little bits of evidence together to build a case for what you think, or what your prediction is in terms of market, in terms of what the market will do. Right, so having looked at the structure side of things, let's just do our zoom around the world, and see what other markets are doing. Up on the screen, we've got the weekly and daily charts, three-line break charts of the USD versus South African Rand. Nothing much changing on the weekly front. We've still got the strengthening pattern well in place over here. Similarly, on the daily front, we've got a strengthening pattern, but it's quite interesting to see that we had this deep retracement, obviously, which we flagged last week as well, in last week's report, on the weakening Rand. Then the Rand started to strengthen again, and it's actually started to weaken again now, moving up. The last hourly, last daily close was at 1364. Now, if we get a daily break and close above this level here, which comes in at about 1391, that's going to be extremely bearish for the Rand, and quite bullish for our local market, which is obviously supported by to a large extent by a weaker Rand via the impact of the currency on our Rand hedge stocks primarily. So this is quite a critical level to watch from a daily perspective. If this market continues to weaken at the start of the new week and pushes through that 30 and closes above that 1391, we can actually expect further weakness, and again that will add upward momentum to the market. As things stand, we are still in a strengthening trend, but critically, the market has not managed, and I don't think any of us expected it, in that last bout of strength to the downside, following the political fallout of the past past couple of months. We had the strengthening, and I don't think any of us really expected us to retest these prior lows over here. But we definitely haven't, and now we're in a weakening retracement at the moment. And so we will be keeping an eye on these levels in the coming days and potentially weeks. If we look over at the US on the other hand, here we just have the markets continuing to push higher and higher and higher. Every time you think the US is in some kind of a rollover and it's going to come back, and even if it breaks to the downside on shorter time frames, on the hourly time frame, for example, on the dailies and the weeklies, the strength has really been phenomenal. We've got this push up, really relentless push up on the weekly that hasn't pulled back at all since the US elections. And on the daily we did have a bit of a retracement, but now we've broken up and we're actually forming higher highs again. So US market is definitely making the case for continued for continued upside impact on our local market. The market which has disappointed is oil. And as you can see on the weekly, all we have is we've got this deep retracement that's playing out in oil at the moment. If we put a Fibonacci on there, roughly we're pulling back towards that 61.8 level in terms of a retracement. It's a strengthening trend, remains a strengthening trend on the weekly charts, but it has been in quite a deep, it's a fairly standard retracement in a sense that we only now hitting the 61.8 levels. But on the daily, and this is the one that we've been monitoring quite closely through our daily reports, we've been flagging this 50, 58, call it around the $50 level, and the market's actually broken through that quite emphatically. We've got a bit of a retracement. You can't see it on this chart, but we do have a bit of a retracement back, so throwback to this breakout level over here playing out. But for what's happening at the moment on the daily charts, this is quite a bearish situation, and one would expect in the coming days for the downside on the oil price to continue, and so for us to see further weakness. So that's something to monitor. Gold is really, as it generally does, showing us the inverse of what's been happening on the US markets. We've still got the bullish bias in place on the weekly chart as the market pushes up, but we've been really stuck in a range for the past month. We've been stuck inside this three-line break candle, which, as you can see, printed on the 10th of April. And here you can see why. I mean, we had this strong push up all the way here into the middle of April, and then we've had this retracement playing out. So gold has had a bullish run, and it's in retracement. The trend remains bullish, but it's going to be critical that on a daily basis gold holds this level coming in at around about, let's make sure we got it there, around, let's call it the even $1,200 level. If we see a daily break and close below that $1,200 level in the days and weeks ahead, that's going to be extremely bearish for the gold market, and we could certainly see further downside playing out there. But if we put all of this together, we've got gold. Yes, it's still in a bullish trend, but we've got a bearish retracement in gold. We've got the US just pushing up and continuing to push up, and we've got the rand again in a strengthening trend, but in a retracement. The shorter term time frame is leaning towards pointing to further upside impact on our local market. So combining that again, as we always do with our structural analysis, where we're seeing the day ending or the week ending with some upside bias, where we're seeing the market still in an uptrend, where we're seeing a pattern repetition of which culminated in further upside, where we're seeing confluence of factors in terms of a push towards that 48,000 level. The bias going into the new week, barring any call it black swan to a certain extent, impact coming through from the French elections. We've got to give the bias to the bulls, to the upside, and support a market, or give support to a view that the market will continue to the upside in the coming week. Guys, that's pretty much all that I have for you for next week. As always, if you enjoyed this video, please just click that like button under the video. I really appreciate that. If you've got any comments, questions, please feel free to drop me a line. It's richard@underdoginvestments.co.za. And if you want to get involved in some of our trading strategies, in some of our courses, the way we look at things, the way we analyze things, our daily subscriber list, again, just drop me a line, richard@underdoginvestments.co.za, or pop over to our website, www.underdoginvestments.co.za, and I'll be happy to touch base with you and share with you the kinds of things that we can and do together in your trading. Guys, that's it for now. I'll chat to you soon. Have a great trading week next week, and always be safe in your trading. Cheers.